the era of software as a simple utility is over. We have entered the intelligence supercycle. This isn't just about efficiency, it's a fundamental reconfiguration of the global economy. Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site to discuss the strategic shift in the global economic landscape, we have Nasdaq's Chris Dearborn, Managing Director on the Nasdaq Market Intelligence Desk, Phil Mackintosh, our Chief Economist, and Mark Marex, Global Head of Nasdaq Index Insights. And joining us from Chicago, we have Paul Schroeder, Factor and QQQ Equity Product Strategist. It's great to have all of you with us. Welcome to the show. And Paul, certainly a key story in the market as we kick off 2026 and the impact of software within the digital economy.
Yeah, we've definitely seen software have a large impact on overall major indices this year. If we take a look at where the Nasdaq 100 topped, which was around January 28th, to where it bottomed here recently on February 5th, we saw software indices down between 18 to 20%. Over the past few days, we have had a little bit of a rebound. Overall indices have been relatively flat to up, and software indexes now are down by about 12 to 15%. So we definitely have seen a larger influence of software companies. A lot of news has been coming out over the past few weeks on what's going on within that industry specifically, earnings announcements that have caused a lot of movement within that sector.
Yeah. And Mark, really the question that we're asking from a long-term perspective, have these fundamentals really shifted, or are there other areas of tech that investors are looking to put money towards?
Yeah, I mean, it's something I think to drill into a little bit is just the fact that software is not a monolith, right? And tech is not a monolith either. And whether you're talking about tech sector specifically or Nasdaq 100, which is a little bit broader in terms of exposure, right? Look back 3 months, the performance of semis versus software is like an alligator mouth, right? Semis has continued to shoot straight up, I think up something around 15% the last 3 months. Software has been in this technical bear market now, largely because of, right, these headlines from Anthropic and OpenAI and Google Gemini around disintermediating, right? A lot of the, really, really solid fundamental businesses that have grown up around software over the last decade or so. But a lot of it, I would say, so far is, the market shooting first and asking questions later, right? Selling it off the whole space as a monolith, regardless of is your competitive, position in the software space based on, how much data you're sending out to your clients? Is it based on charging seat-by-seat licenses? What is your ability to defend against this threat from AI? And so I think there's a lot of extra road to this path over the course of this year and following years to figure out who's going to win, who's going to lose.
Yeah, and Phil, the software sector at this point, it is a leading indicator for the broader global economy. I mean, we've seen the contribution to GDP that it's had here, at least in the U.S.
I mean, what's really interesting is it feels like investors are taking profits, doing some pretty weird reallocations. We saw the huge run up in precious metals. We've seen a sell-off in Bitcoin. We've seen a really dramatic shift out of growth and into value. So it's almost like investors have been watching and all waiting, maybe a little bit crowded in some of the trades from last year. And as we've started to see a little bit of rebalancing, we've seen a lot of people sort of try and get out at the same time. So lots of asset allocation looking decisions if you look at the returns so far this year in the market.
Yeah, and Chris, it's interesting because really it's been about momentum over the past couple of years and just, going where the crowd is. And to Phil's point, we're seeing some portfolio management.
Absolutely. You've seen a kind of divergence a little bit to the real economy from the higher PEs that a lot of the tech names have been rewarded, especially in the AI space. You've also seen a very crowded trade in silver, gold, Bitcoin being halved, essentially. And with that, you're seeing other sectors rotating much higher. You're seeing growth in utilities. You're seeing staples starting to catch a bid now, finally. So you're seeing that rotation take place, whether it's from significantly overcrowded trading or just a rotational into more stabilized companies with projectable earnings as opposed to reinvesting your profits into potentially unknown areas.
Yeah, and Paul, really the conversation has shifted as well to multiples readjusting and realigning, which, if you like these stocks a couple of multiple points before, perhaps this is a longer term opportunity.
It definitely could be. I mean, we've seen PE or multiples in general not necessarily be the best indicator for the Nasdaq 100 over longer periods of time. In general, we've typically seen them on the higher end though over the past few months, right? So I think it definitely presents a longer term opportunity for these investors who might be looking further down the road to get in some of these companies that have been bid up over the last 3 years, to get in at perhaps a more favorable multiple that they're more easy to swallow. I mean, I think to the point that Phil made earlier as well, we're also seeing investors expand down cap market spectrum, within value and also within the NASDAQ Next Gen as well. Some of those Next Gen 100 companies aren't facing the same sort of CapEx spend that some of the larger companies are, and they've been performing really well. You also see a little bit of a diversification within there, within hardware, such as storage and memory for computers. So I like where things are in the market, and with where valuations were, a little bit of a revaluation isn't necessarily uncommon or unwelcome.
Yeah, and Mark, I think Paul makes a great point there. Software kind of became the tech sector, right? When at the end of the day, you need to do something with all this data, right? So think about hardware as an example and expanding on storage capabilities. Cybersecurity, of course, that's a theme that you and I have been discussing. The more data, the more you build out the tech stack, the more vectors are exposed. So it's not just software as the tech space. There are other areas that could or have been working.
Yeah. I mean, and not to mention the fact that if you have millions or billions or trillions of AI agents, crawling around the web and all these different, enterprise software platforms, whether it's, Salesforce, CRM type stuff, or, marketing or whatever, there are definitely companies that are going to accelerate their growth from that, right? Again, it's about figuring out if you've got something proprietary in terms of data and you can get AI agents to interact with that and query it more and produce some value add on top of it, you're not necessarily looking at a weakening fundamental environment, right? The real competitive pressure is on the companies that sell seat-by-seat licenses, where all of a sudden maybe you don't need a team of 5 people doing that job with 5 individual licenses. Maybe you need 1 person and 1 AI agent doing it with you. And to your point on cyber, we've seen this happen with cyber before, actually, when there's a broader sort of scare around the tech space in terms of discretionary spending on cloud and SaaS and all these things. We saw it in 2022. Cyber sold off right in line with things like cloud computing and the broader NDX. Did it change anything fundamentally about the cyber growth story? Absolutely not, right? And it's just the perfect example, I think, of reminding folks that, the market, when it starts to get wind of a big structural change that impacts different sectors on different time periods, it doesn't always get it right on the first move, and the challenge really is picking apart, where are those differentiating paths in terms of winners or losers. So that's what we're looking for in the Nasdaq 100. But interestingly to note, right, software entered a bear market, 20-25% peak to trough decline over the last 3 months. Nasdaq's been pretty much flat. Right? So it's not just software, it's semis, it's hardware, it's consumer, it's all these other things. So again, don't think of it as a monolith.
Yeah, and certainly expanding the different types of exposure to different sectors, Phil, I'm sorry.
I mean, to your point about the ecosystem, we've been seeing the trade evolve from the middle of last year, really, where the Mag 7 had got pretty expensive and it stopped going up, and you started to see some of these smaller companies that were involved in chips, that were involved in memory, start to outperform. So you really have, for the last 6+ months, seen a rotation even within tech. And so I think people are starting to look down the line. It's like, okay, imagine the AI models are in place. Who's going to be a winner? Who's going to be a loser? And it's a stock pickers market where you can start to see where is the industry going to go, how much productivity a different industry is going to get out of this, where are the margins going to expand, and where aren't they going to expand.
Yeah, and Mark brought up a great point about the composure of teams, right? And what job skills are going to be necessary. World Economic Forum, January 2026 Future of Jobs report projects 92 million jobs displaced globally by 2030, but 170 million new jobs created. So that's a net gain of 78 million positions.
Yeah, and we might not know yet what those jobs are going to be. I mean, I think one of the really interesting case studies coming out of the internet bubble is a company like Netflix. Right? Netflix didn't exist in the 90s. It started with CDs that I had to mail to people because the internet really, the bandwidth on the pipes and the transmission of streaming wasn't strong enough. It was only once streaming really got strong enough that Netflix flipped from CDs to what it is now. So it's a brand new company with a brand new product that didn't exist in the 90s. Who's that company going to be coming out of AI?
Yeah, that's a great point. And Chris, you know, in terms of market reaction.
Yeah, well, I mean, look, going back to the other point before about the divergence of some of the different indices, if you look at the S&P 500 software versus the Nasdaq 100 versus the SOX index, you see a clear divergence where the SOX is outperformed by almost 40 basis points to software over the last year, and really a lot of that divergence came starting in October. To your point, it's been a 3-month bear market, but I'd say it even started a little bit earlier than that, maybe even beginning of October, if not before, where software stocks started to sell off and getting a little bit of a scare into there. But the good thing here is, and you've seen it on some of the larger Mag 7 names here, that they're talking about the spend they're going to be putting forward, the hyperscalers putting into the investment here. There's going to be clear winners from all of those names going to the stock pickers market of who's going to benefit from that CapEx spend. You're talking close to $600 to $700 billion over the next year, with some of the biggest names, 150, $200 billion. There's going to be some clear winners there. You just got to figure out who they are.
Yeah. And Paul, I see you shaking your head in the background there, agreeing with Chris.
Yeah, definitely. I mean, I couldn't have said it any better than Chris right there. I mean, with where we are in the cycle, we're still very early, and the amount of money that's being thrown out, you know, and all the focus that is on margin, you know, I'm not surprised that investors are getting a little skittish as of right now, but that doesn't necessarily change the long-term strength and trend that we're seeing from AI, right? Everything has come off the back of the picks and shovels, so to speak, building the infrastructure for it, you know, and we're still waiting to see the lift from really the efficiencies that AI is going to bring. So I think where we are right now, it kind of makes sense that people are slowing down a little bit and asking the right questions, but does that mean that we need to throw the baby out with the bathwater? I don't think so.
Yeah, and that's a great point that Paul makes, Mark, because I think a lot of this is going to come down in terms of how management's able to execute on their strategy as well. And that's an entire cultural and shift management change too.
Yeah, for sure. I mean, look, you have to, I think we have no choice but to continue to engage with these tools. You know, Copilot a year ago is nothing like it is today in terms of, you know, not just the different functionalities that are built in terms of the agents that are now set up that kind of come with your Microsoft Office package, but just the actual like rate of accuracy and insight and type of productivity that you can get out of it. And Microsoft, I think, is kind of one of these great examples, again, of like it's traded down in valuation so much over the last few months. It's actually, I think, trading at a slight discount on a forward PE basis to the broader S&P 500, which is sort of incredible when you think about the fact that Azure is one of the top 3 cloud platforms. They've got OpenAI, ChatGPT integrated with Copilot. They've got something like 90% enterprise adoption with Copilot, not to mention GitHub in terms of their coding Copilot tool. So they are in this in a bigger way than almost anyone. And yet, you know, these kind of market storylines shift where for a large chunk last year, Amazon was out of favor. The year before that, Google was out of favor. This year, it's Microsoft. Does it mean it's going to continue to be this way for another year or 2 years? Like, I don't think anybody knows that for sure. I think there's a lot of holes you can poke in that argument.
Oh, I think there's a ton of holes that you can poke in that argument, you know, especially with the recent news in terms of AI and, you know, impacting service companies as an example. Do you think that banks, as an example, right, are going to completely upend their tech stack, right? I mean, there's just layers and integrations and, you know, never mind the security protocols.
Well, we're hearing about it, right? Like Goldman recently announced they had a bunch of people from Anthropic integrating Claude to literally automate like half of their accounting and operations team. Assuming they end up doing that, what's going to happen to Goldman's bottom line, regardless if they can grow revenue or not on top of that, right? They're going to be more profitable. So there's all different ways that different companies, different sectors have yet to, you know, fully flesh out how they're going to benefit, how they're going to lose.
Yeah, I mean, to your point before, Phil, we've been through this before, and you'll see, you know, could be tumultuous for a time with the job market, but you'll reskill, upskill, and just out of the internet age.
I think one of the really interesting things is people talking about some jobs will be augmented, where AI will do all the bureaucracy and the boring stuff that you really didn't want to do yourself anyway, and let you have more time to be creative and deliver more on creativity. Maybe.
How do you think this gets done with all the research?
So not everybody's going to be losing their jobs. Sometimes our jobs are actually going to get much easier and more interesting because of AI, and then there'll be new jobs that we don't even know exist in the future.
Yeah, I mean, Chris, especially, you know, you and I involved with the market, taking notes all day long, it just directs you to better research, and I think that's where we're seeing those efficiencies. The question is, where are companies going to extract value beyond that?
The market's climbing a wall of worry every day, and it's headline driven. If AI can help disperse some of that noise on a day-to-day basis, you might actually see a more stable market on a day-to-day investment stasis where people can buy and sell what they decide because of their investment thesis. When you talked before about the Nasdaq 100, you got a broad-based ecosystem. They have the largest companies in the world. One sector you didn't mention was energy in there as well, right? So you have a nice taste of almost everything there. Definitely tech heavy, but isn't almost every company now skewed towards tech?
Right. I mean, you could make that argument, Paul, that at the end of the day, we're all experts in data to some perspective as it relates to our job. But if you're in the consumer space, if you're in healthcare, if you're in energy, if you're in a traditional tech sector, it's, you know, you're going to be exposed to it. To Mark's point earlier, you have to get on board and understand how it's going to integrate within your role.
You're 100% right. I mean, every company needs to be technologically focused in order to be relevant here in 2026. You know, you think about where we necessarily are and how they're implementing it, and we are just starting to scratch the surface of the type of efficiencies agentic AI can add. We haven't even gone into physical AI and the adoption, broader adoption of that. So I think there definitely is a longer runway here with the overall theme.
All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.